Hey everyone, and welcome back to the channel. Today, we're diving deep into a major financial move by one of the pioneers of e-commerce, eBay. They just announced a massive $1 billion senior unsecured notes offering. Now, I know what you might be thinking. Bonds, notes, finance jargon, sounds complicated, right? Don't worry, we're going to break it all down in plain English. What does this actually mean for eBay, for its investors, and even for you, as a user of their platform? Let's get into it. First, let's understand what's happening. eBay is essentially borrowing $1 billion from the market. They're doing this by issuing something called senior unsecured notes. Think of it like this. eBay is selling IOUs to big investors like pension funds and insurance companies. These IOUs come in two different flavors, or tranches as they're called in the finance world. The first is a $500 million batch that matures in 2029 with an interest rate of 5.35%. The second is another $500 million batch that matures a bit later, in 2034, with a slightly higher interest rate of 5.55%. So, why two different types? It's all about managing risk and timing. The shorter-term notes offer a quicker return for investors, while the longer-term ones lock in a borrowing rate for eBay for a full decade. The interest rates, 5.35% and 5.55%, are what eBay will pay investors each year for lending them the money. When the notes mature in 2029 and 2034, eBay will pay back the original $1 billion. The term senior means that if eBay ever faced financial trouble, these note holders would be among the first in line to get paid back. And unsecured, that means the loan isn't backed by any specific asset, like a building or a factory. Instead, it's backed by eBay's overall financial health and its good reputation. This brings us to the big question. Why is eBay borrowing $1 billion right now? The official press release is pretty standard. It says the money is for general corporate purposes. This is a very common, broad term that can include a lot of different things. It could mean repaying existing debt, especially if that older debt has a higher interest rate. Imagine you have a credit card with 20% interest. If you could get a new loan at 10% to pay it off, you'd do it in a heartbeat. It's the same principle for a huge company like eBay. They might be refinancing to lower their overall interest costs, which is a very smart financial move. Another possibility is funding share buybacks. This is when a company uses its cash to buy its own stock from the open market. Why would they do that? Well, when the number of available shares decreases, the value of each remaining share tends to go up. It's a way to return value to shareholders and signal confidence in the company's future. If eBay's management believes their stock is undervalued, using borrowed money to buy back shares can be a powerful strategy. It shows they're betting on themselves. Then there's the exciting stuff: growth and investment. $1 billion is a serious amount of capital that can be used to fuel future expansion. We could be talking about investing in new technologies. Think about artificial intelligence. eBay could use this money to develop better AI-powered search algorithms, making it easier for you to find exactly what you're looking for on their site. They could enhance their recommendation engines or improve their tools for sellers, helping them manage their listings and sales more effectively. Technology is the backbone of e-commerce, and staying ahead of the curve is absolutely critical. Another area for investment is marketing. In the incredibly competitive online marketplace, you have to shout to be heard. This money could fund major advertising campaigns to attract new buyers and sellers to the platform, or to remind everyone why eBay is still a fantastic place to shop. They could be looking at international expansion, pushing into new markets where e-commerce is still growing rapidly. Building out the infrastructure in a new country, from logistics to local marketing, costs a lot of money. And let's not forget about potential acquisitions. Sometimes, the fastest way to grow or acquire new technology is to buy another company that already has it. eBay has a history of strategic acquisitions. Could they be eyeing a smaller tech company that has developed a breakthrough in payment processing, logistics, or even a specialized e-commerce niche? A billion-dollar war chest gives them the flexibility to pounce on an opportunity if the right one comes along. So, what does this move tell us about eBay's current position? First, the fact that they can successfully borrow $1 billion at these interest rates speaks volumes. It shows that the financial markets have a lot of confidence in eBay's ability to pay back its debts. Lenders have looked at their balance sheet, their cash flow, and their business model, and they've decided that eBay is a solid bet. This is a strong vote of confidence in the company's stability and its long-term strategy. It tells us that despite all the competition from giants like Amazon and specialized platforms like Etsy, eBay is still seen as a robust and creditworthy player in the e-commerce space. This is especially interesting when you consider the broader economic climate. With talks of inflation and potential slowdowns, a move like this can be seen as both defensive and offensive. Defensively, they are securing capital now, locking in today's interest rates before they potentially go higher. Offensively, they are arming themselves with the resources to invest and grow, even if the economic environment gets a bit tougher. It's a sign of a forward-thinking management team that is planning for the future, not just reacting to the present. Now, what does this mean for you? If you're an eBay seller, this could be great news. Investments in technology could lead to better seller tools, making it easier to list items, manage inventory, and reach more buyers. Enhanced marketing could drive more traffic to the site, which means more potential customers for your products. If eBay invests in improving the user experience, it makes the whole platform a more attractive place to do business. A stronger eBay is a better partner for its sellers. If you're an eBay buyer, you could also see benefits. An investment in AI and search technology means finding that rare collectible or that perfect deal could become much easier and faster. A smoother, more intuitive website or app makes for a better shopping experience. If eBay uses this money to improve its logistics or partnerships, you might even see faster or cheaper shipping options in the future. Essentially, any investment that makes the platform better for sellers ultimately benefits buyers too, by creating a more vibrant and efficient marketplace. And what about investors? If you own eBay stock, this move is a mixed bag, but generally positive. On one hand, taking on more debt increases the company's financial obligations. But, on the other hand, it's a sign of confident, proactive management. If this borrowed money is used wisely to refinance old debt at a lower rate, buy back shares, or invest in high-growth projects, it could lead to significant long-term value creation. The market's positive reception to the offering suggests that investors see the potential upside. They see a company that isn't just sitting still, but is actively managing its finances to position itself for future success. So, in summary, eBay's $1 billion note offering is much more than just a dry financial headline. It's a strategic move that provides a fascinating window into the company's plans and its outlook on the future. They are securing a massive amount of capital at a favorable time, giving them the flexibility to strengthen their financial position, reward shareholders, and, most importantly, invest in the technology and marketing that will keep them competitive for years to come. Whether they focus on refinancing, buybacks, or innovation, this is a bold move that signals confidence. It shows that the original online auction house is still a formidable force, actively working to evolve and thrive in the ever-changing world of e-commerce. It will be really interesting to watch what eBay does with this capital over the next few months and years. Will we see a major new tech rollout? A big marketing push? A surprise acquisition? Only time will tell, but it's clear that eBay is gearing up for its next chapter. What do you think eBay should do with this $1 billion? Let me know your thoughts down in the comments below. I read every single one. If you found this breakdown helpful, please give this video a thumbs up and consider subscribing for more deep dives into the business and finance news that matters. Thanks for watching, and I'll see you in the next one.